Ever wondered how to build a perfect credit score from scratch? Well, that's exactly what we're going to explore today. A credit score, in simple terms, is a three-digit number that lenders use to evaluate your credit worthiness. It's like a financial report card, with numbers ranging from 300 to 850. The higher your score, the more likely you are to be approved for loans and credit cards at the best rates. But what if you're starting from zero, no credit history at all? Well, you're in the right place. We're going to guide you through the steps to build your credit history and aim for that perfect score of 850. This journey requires patience, good financial habits, and strategic thinking. But don't worry, we've got your back. Ready to take the first step towards building a perfect credit score? Let's dive into it. So, you're starting from zero, but what does that mean exactly? Well, in the world of credit, starting from zero means you have no credit history. Think of it as a blank canvas, waiting for your financial portrait to be painted. Your credit history is a record of how you've managed borrowed money. It's what lenders, landlords, and sometimes even employers look at to determine your financial trustworthiness. But when you're starting from zero, there's no history for them to look at. So, what contributes to a credit score? It's a mix of several factors. Firstly, your payment history, which is whether you've paid your debts on time. Then, your credit utilization, which is how much of your available credit you're using. The length of your credit history, the types of credit you have, and recent inquiries for credit also play a part. Now that you understand where you're starting from, we can start building. Building a credit score from scratch is not as daunting as it may seem. In fact, it's a journey that can be both enlightening and empowering. Let's dive into the first steps you can take to start building that all-important credit history. One of the easiest and most accessible ways to begin is by opening a secured credit card. This is a type of credit card where you make a deposit into a checking account that serves as your credit limit. By using your secured card responsibly, you're showing potential lenders that you can manage credit well. Remember, it's not about how much you spend, but rather how reliably you can pay it back. Another option is to become an authorized user on someone else's credit card. This might be a parent, a spouse, or a close friend. As an authorized user, you'll reap the benefits of their good credit habits. Just make sure the primary cardholder is someone who manages their credit well, as their habits will directly affect your credit score. If credit cards aren't your thing, you might consider a credit builder loan. Unlike traditional loans, a credit builder loan holds the amount you borrow in a bank account while you make payments. These payments are reported to credit bureaus, helping you establish a credit history. Once the loan is paid off, you'll receive the total amount borrowed. It's a great way to save money while building credit. Remember, these steps aren't shortcuts to a perfect credit score. They're the foundation of your credit history. They show potential lenders that you can handle credit responsibly, setting the stage for larger loans and better interest rates in the future. Credit building is a long-term game, and patience is key. After all, Rome wasn't built in a day, and neither is a stellar credit score. It's a journey of small, consistent steps, each one bringing you closer to your financial goals. Once you've got your foot in the door, it's all about consistency and smart financial habits. Keep building, keep growing, and before you know it, you'll be on your way to achieving that coveted 850 credit score. Consistency is key when it comes to building a good credit score. Now let's dive into the specifics of maintaining good financial habits. First and foremost, paying bills on time is crucial. This might sound simple, but it's a factor that cannot be overstated. Each late payment can significantly impact your credit score. To avoid this, consider setting up automatic payments or reminders to ensure you never miss a due date. Now, on to credit utilization. This refers to the percentage of your available credit that you're using. Ideally, you should aim to keep this figure below 30%. Why, you ask? Well, high credit utilization can signal to lenders that you're heavily reliant on credit, which can be seen as a risk. So, if you have a credit limit of $1,000, try to keep your balance below $300. Finally, let's talk about new credit. While it may be tempting to apply for every credit card offer that lands in your mailbox, this could potentially harm your credit score. Each time you apply for a new line of credit, a hard inquiry is made, which can slightly lower your credit score. Multiple inquiries within a short period can create the impression of financial instability. Therefore, only apply for new credit when necessary. These are just a few of the financial habits you can adopt to help build and maintain a robust credit score. Remember, there's no magic formula to getting a perfect score overnight. It takes time, patience, and consistent effort. Keep in mind that your credit score is a reflection of your financial health, and maintaining good habits will not only improve your score but also your overall financial well-being. By maintaining these habits, you'll be well on your way to a higher credit score. Stay tuned as we delve deeper into the journey to achieving an 850 credit score in our upcoming scenes. Building a good credit score is not a set-it-and-forget-it process. It's like a garden. You plant the seeds, you water it, you nurture it. But you also need to keep an eye on it, watching out for any weeds that may sprout up, or any pests that may threaten your hard work. Monitoring your credit score is similar. Regularly checking your credit score and report is as vital as building your credit history. It's not just about watching the numbers climb to that magical 850. It's about ensuring that the information representing your financial behavior is accurate and true. You see, your credit report is a detailed record of your credit history. Credit bureaus compile this data and it forms the basis of your credit score. Lenders, landlords, and even potential employers may look at this report to gauge your financial responsibility. Errors on your credit report can occur. They could be as trivial as a misspelled name or incorrect address, or as serious as an account you never opened, suggesting identity theft. These inaccuracies can negatively impact your credit score, making it harder for you to reach your goal. So, how often should you check your credit report? At least once a year. But if you're actively working on improving your score, consider checking it every 3 to 4 months. Now, if you spot an error, don't panic. The Fair Credit Reporting Act gives you the right to dispute inaccuracies. You can file a dispute with the credit bureau that released the report, and they're required to investigate it, usually within 30 days. If your dispute is valid, the bureau will correct the error and your credit score should increase. If not, they must provide an explanation. It might seem like a hassle, but it's a critical step in ensuring your credit report accurately reflects your financial behaviors. Keeping a close eye on your credit score will ensure you stay on track and reach your goal. Remember, it's your credit, it's your responsibility, but the effort is worth it. After all, a high credit score opens the door to countless opportunities. Now let's talk about the pinnacle of credit scores, the elusive 850. It's like the Mount Everest of credit scores, a number that denotes perfection. But how does one even begin to climb this formidable peak? Well, let's break it down. To reach an 850 credit score, there are a few key factors you need to consider. The first is having a mix of credit types. This means having a healthy combination of revolving credit, like credit cards, and installment loans, such as mortgages or auto loans. This shows lenders that you are capable of managing different types of credit responsibly. Next, you need a long credit history. The longer your credit history, the better your score can be. This is because lenders want to see that you've been responsible with credit over a significant period of time. So, if you're just starting out on your credit journey, don't be disheartened if you don't see an immediate rise in your score. Remember, Rome wasn't built in a day. Another important factor is your payment history. Always paying your bills on time is crucial to achieving a high credit score. Late payments can significantly impact your score, so set reminders or automatic payments to ensure you never miss a due date. Lastly, keep your credit utilization low. This is the ratio of your total credit card balances to your total credit card limits. A low credit utilization rate shows lenders that you aren't over-reliant on credit, and this can boost your score. Now, while reaching an 850 credit score is a great goal, it's important to remember that anything above 800 is considered excellent. This range will get you the best interest rates and terms on loans and credit cards, so don't stress if you're not quite at 850 yet. With patience, consistency, and smart financial habits, you too can reach the highest peaks of Credit Score Mountain. It's a journey, not a race. And every step you take towards improving your credit score is a step towards financial freedom and stability.